Well, hello everybody, welcome to the Forex Market Analysis session. My name is Alexander Nikitin. I am a professional trader and a developer of MPS software. If you guys are new, what I do in these videos, I'm showing you the trading setups, trading opportunities that I'm looking at, as well as I explain some aspects of technical analysis and psychology of trading. And today's video is very important. In this video, I will explain you the principle of trading, the principles of having a statistical advantage, the principle of having an edge. If you don't have an edge, you are losing money. If you do have an edge, you are generating money. This is very, very simple, and it all depends on how you read the price chart. It all depends on the basics. As we all know, we first start from some sophisticated systems, and when we realize that something is not working, we have lost our first account, then we have lost our second account, and then we understand that we need to do something, we need some education, we go read some books, we go to have some trading courses, and we come to conclusion that we don't even know the basics. After we understand the basics, it becomes a bit more clear, and after we practice using those basics, it then becomes more and more simple to trade, more and more simple to generate money. But the problem is that majority of traders will quit trading after they realize that the first system that was advertised to generate tons of money simply doesn't work. They quit that. That's why 90% of traders don't even realize they need some education, they need some basics. Okay, let us start from the basics then. It will be an eye-opening experience. I bet that you don't know at least 70% of what I'm going to tell you today. You don't know it, you never heard it before. Well, first of all, as I told you, it all depends on how you read a price chart, and the methods of reading the price chart are very simple. Actually, we only have one method that was explained by Charles Dow in early years of the 20th century in his Wall Street Journal articles. Actually, the Charles Dow is the founder of Wall Street Journal magazine. So in these articles, he was explaining the basics of price actions. He was explaining what is the trend, what is the price movement, what are those major minor trends, what is the fractal nature, and many stuff. All technical analysis is based on Charles Dow's views. So actually, Charles Dow is the founder of technical analysis. Although maybe he didn't consider himself to be a founder of technical analysis, but he is the founder of technical analysis. So whenever you look at the chart and you wish to make a decision based on this chart, either to buy or sell, you are looking at the technical analysis. So to read the price chart, you need to use this method. And as Charles Dow said, price already includes everything, so you don't need to look at anything else. Price will tell you everything. All economic events, all economic stuff, all news releases, all buyers, all sellers, first of all have this information. After that, they analyze that information, they make some decisions, and then they buy or sell. And what is the result of buying and selling? Printing these candles. It is simply the result of buyers and sellers. When next deal is done, you either have a tick to the upside or a tick to the downside. What are those reasons for the deal? Who knows? It doesn't matter. Next trade is done, you have a tick to the upside or you have a tick to the downside. What are those reasons for that tick? What are those reasons for that trade? Doesn't matter. Okay, so concentrate on price action only, and you will have it all. All events already included in this price action, they go prior to this printing. Okay, can we then forecast some future using that price action? Of course we can. Simply go into history, and you will find the stuff that Charles Dow was talking a lot. They are called trends. So what is the trend? It is a special pattern of price action. When price moves first to the upside, then it moves to the downside, and then it moves to the upside. So he says that it installs a low, it installs a high, then it installs a higher low, then it installs a higher high. Basically, the series of higher highs and higher lows is understood as an uptrend, and it is inverse for a downtrend. Basically, the series of lower lows followed by lower highs, it is a downtrend, like this. That's it. Anything outside of these two patterns, either this or that, anything outside of that is called consolidation. For example, if we have price action here, we are still in a downtrend. Odds are in the favor that price will continue, because downtrends are tendencies for price to move lower. It is a tendency. Okay, if price goes slightly higher, let me draw it this way. If it goes higher, exceeding the previous high, yes, this means that we entered consolidation mode. Consolidations are 50-50. You don't know, either it will continue the previous downtrend, something like this, or it will turn into a new uptrend, something like this. Look at this head and shoulders pattern, by the way. You never know it. So when consolidation, it is at 50%. You don't know if the downtrend continues or if it will stop. Okay. Very simple, very, very simple. But what is the problem? If it is so simple, what is the problem? The problem is that people are trying to force patterns. They are trying to see some pattern when it doesn't exist. Yes? So what it means? For example, somebody is very, very much sure that we have a downtrend here. Somebody is very much sure that, yes. So we have this stuff, and then we have this stuff, and then we have this stuff, and then we have this stuff. Somebody is saying this is a downtrend. For example, we had it this way. And to support his views, what he's doing, let me switch to some other. What he's doing, he is changing his swing identification algorithm. So he says, you know what? My downtrend looks this way. This is first low, high, then we have this, and then we have this. So he is fitting his beliefs into price action. And as long as we didn't violate this, yes, this means that we are in a downtrend. Is this a problem? Yes, it is a problem. Especially when this retracement is kind of small. It is not when it is kind of this type of movement. You can say, you know what, we have an Elliott wave count 1, 2, 3, 4, 5, and this is a zigzag that is followed by another 1, 2, 3, 4, 5 to the downside. So you can find whatever evidence to support your views if you have an uptrend or a downtrend. So the problem is the swing identification rules, the swing identification algorithm. This is a big problem based on this swing. Depending on how you define this swing, yes, maybe it is one swing or it is two swings. Yes, depending on how you define that, it will be an uptrend, a consolidation, or it will be a downtrend, it will be a double top, a double bottom, it will be a head and shoulders, it will be an advanced pattern, harmonic pattern, and whatever pattern, patterns, triangles, and all these patterns, they are all based on the swing identification technique. So the first thing you need to do is to understand how to draw swings. And the answer to this question, how to draw swings, is actually this: how to identify the turns, how to identify the extreme prices, how to identify them. Okay, so this is called the swing identification algorithm. You simply identify the relative high, relative low, and then you unite them together using your trend lines or whatever, and you see a pattern here, or you don't see any pattern here. Okay, so my market research in swing identifications in different approaches of how to identify swings. During my market research, I realized that there are two main approaches, two main methods. So let us first type method. Methods. Two methods of swing identification. One of them is using price action, another is using oscillator. So price action extremes, yes, and oscillators oversold conditions. So oscillators is very often used by eliticians, and you know that elite waves is one of the most popular waves of market analysis. And it is also based on how you read the price chart. It's also based on what you consider to be a swing to the upside, a wave to the upside, to the downside. How will you count the waves? Should you treat this wave as one, or you should treat that as two waves? Yes, you see that? Okay. And I came to conclusion that it doesn't matter what swing identification algorithm you use, as long as you use one method consistently and it shows positive expectancy on history, you will generate money using this consistently. Because sometimes, in order to support your views, you can switch from one swing identification to another swing identification, and this is the problem when you use your eyes to identify swings. For example, you had a large pattern, yes, that has lost money, and you start being afraid of those large swing identification. You say, you know what, I should pay attention to minor swings, and you're looking at some minor swing identification, and then you lose money, and you look at less swing identification. You go smaller and smaller and smaller. You end up trying to pick every turn of the market, and you are lost in that noise of the market, and you end up having nothing. Okay, let's go back to these two main methods of swing identification. Let's talk about them in details. The first method is called the fractal system. It is very simple. It is explained by Thomas Demark, but it is also very good explained by Jack Schwager in his technical analysis, and by Larry Williams in his books also. Okay, so what is the fractal? Let's say we are looking at the 5-period fractal. This means that we should have 5 candles, and the 2 candles before the middle one are having lower highs, and 2 candles after the middle one having lower highs as well. If this formation is set, then we have an upside fractal. When we have an upside fractal, it means that downswing started. So the downswing will continue all the way until you have an opposite signal. 1, 2, 3, 4, 5, 2 to the left, 2 to the right. You have a turn to the upside. This means that this downside swing ended, upside swing started. Then you continue, and then you analyze your swings. If you have them this way, you have an uptrend. If you have them this way, you have a downtrend. If you have them in something else, then you have a consolidation. Very, very simple. So fractal-based systems. I bet that you didn't know that. Okay, in order to filter that noise, you can use two candles before middle, 2 candles after middle. You can use 3 candles before middle and 3 candles after middle, then you will have larger swings. And you can use 5 candles, whatever. You can set them to identify major trends, minor trends, it doesn't matter. Another method of using the price extremes is very similar to this. It is simply the highest high between some period of candles. It doesn't matter what it is to the right. You don't know it yet. It didn't form. But let's say you are looking at the highest high of 5 candles. Yes. So you do it this way. You calculate 1, 2, 3, 4, 5. What is the highest high between these 5 candles? This one. Yes. So at this candle, right before that, you have it this way. Yes. Then next candle, you calculate it again. 1, 2, 3, 4, 5. Okay, what is the highest high between them? It is this candle. So this means that at this candle you have it this way. Yes, at this candle. Next candle starts and you calculate it once again. 1, 2, 3, 4, 5. What is the highest high? It is at this candle. Yes. So at next candle it looks this way, like this. So if you will connect them together, you will have this kind of 5 candle channel. Yes. Next candle starts and you calculate it once again. 1, 2, 3, 4, 5. What is the highest high? The highest high is this one. So you see that the channel to the upside is broken. The upside channel is broken. When this happens, it is called that this 5 period swing to the upside started, and it continues the highest high between the 5 candles like this. 1, 2, 3, 4, 5. It is the same. 1, 2, 3, 4, 5. What is the highest between the 5? It is this one. The highest high of that is this. Yes, so if you connect them together, you have it this way. Sorry. Next candle starts and you calculate 1, 2, 3, 4, 5. Yes, what is the highest between them? This one. Yes, this means that you have continuation of this channel to the upside. Then next candle starts and you have the highest between these 5. 1, 2, 3, 4, 5. What is the highest? This one. So it continues at the same level. Next candle starts. What is the highest of this channel? It is 1, 2, 3, 4, 5. It is this one. Again, it is this one. So it continues. Next. Then next candle starts and you calculate what is the highest between the 5 candles. 1, 2, 3, 4, 5. It still stays the same. Yes. Then next candle starts and you calculate what is the highest between the 5. 1, 2, 3, 4, 5. It still stays the same. And then next candle starts and you calculate what is the highest between the 5. 1, 2, 3, 4, 5. It became lower. 1 candle lower somewhere here at this price, and you see the channel started to the downside. Okay, to identify an upswing you are using highs, but to identify a downswing you are using lows. For example, if you have a 5-day low, you have a downswing. Okay, let's calculate 1, 2 from beginning to the end. 1, 2, 3, 4, 5. What is the lowest low between them? It is this candle. Next candle. 1, 2, 3, 4, 5. What is the lowest? This one. Yes. If we connect them together, it looks this way. Okay, next candle starts. 1, 2, 3, 4, 5. What is the lowest? This one. It continues being the same. Next candle starts. What is the lowest? 1, 2, 3, 4, 5. This one stays as the lowest. Next candle starts. What is the lowest? 1, 2, 3, 4, 5. So this one is still the lowest. At the next candle, what is the lowest? 1, 2, 3, 4, 5. It is the same. At this candle, what is the lowest? 1, 2, 3, 4, 5. It is the same. Okay, at this candle, what is the lowest? 1, 2, 3, 4, 5. It turned higher. So we have channel starting to move to the upside, like this. At this candle, what is the lowest? 1, 2, 3, 4, 5. It turned slightly higher. Yes, we are looking at this low just before this candle. Okay, what is this? 1, 2, 3, 4, 5. At this candle, we have this low. It turns slightly higher, something like this. And at this candle, 1, 2, 3, 4, 5, we obviously have a lowest candle being this. Once we set a lowest low between the 5 candles, this means that a downswing started. You see that? So calculating the swings this way, you will have the upswing, downswing, up wave, down wave, and then only after that you can identify your patterns. Hope these methods, these algorithms are very, very simple for you. Hope you understood them. If not, watch this video from the point when I start explaining them. Okay, and now let's talk about the methods that are using oscillators. The oscillators methods are very, very simple. For example, we have a price, moving it this way, yes, something like that. Very choppy, maybe somewhere we have minor movements, somewhere we have larger movements, so it is kind of this. And in the bottom we have an oscillator. It shows us this way. So this is the overbought condition. Let me switch the color to something else. Straight line. Overbought condition. This one is an oversold condition. So if you look at this, you see the extreme coincides with that. So the oscillator supports this being a swing to the upside. If you look at this, the extreme coincides with overbought, so it supports the downside swing. If you look at this, you see that it is the overbought, so you have it continue. Yes, very simple to identify swings this way. If you look at this, simply look what happened on oscillator. It supports that. Yes, look at this, what happens here, it supports this view. Look at this, what happens here, nothing. Look at this, what happens here, nothing. Look at this, what happens here, nothing. Look at this, what happens here. Well, we start moving over oversold. Yes, so this means that we have a downswing, so this movement should be straight to the downside. You see that? And again, if we have an overbought, look at this where it happens somewhere here. So we basically have a swing sometimes this way, sometimes this way, depends on where this happens. Okay, so there is a simple problem with this oscillator based indicators. It is actually lagging indicators. In majority of cases, this overbought oversold conditions go before the actual swing appears, or they go after the actual swing appears. If you draw the swings strictly based on this oscillator, you may have some problems. But you can use that method of simply marking this major turns. For example, this way, yes? So you mark this turn as being overbought, you mark this turn as being oversold, and you mark this turn as being overbought as well, and you see that between the two, this one is higher. That's why you can delete this and fix your swing identification algorithm to fit the price action. This is a combined method. First you look at your oscillator, and then you check if price action shows you the extreme high or extreme low. Okay, I find this oscillator very, very powerful. I find this oscillator algorithms very, very helpful. And this lagging feature of those oscillator is one of the most interesting things that I discovered during my market research, during my backtesting, so whatever you call it, during my testing history. Okay, so let me draw it this way. This is the overbought, oversold. This is the oscillator. Different color. Okay, not to have this messy stuff. This is an oscillator. It moves this way. It is working the best during range periods. An oscillator works the best during range periods. But when we have trending price, something like this, yes, you see the trend started, the range broke into the downside. And here, this was the range, it was broken to the downside. The oscillator starts lagging. You see this blue thing? It tells me that RSI is sold, and it is oversold. And what happens? No reversal yet. And then price continues even lower. It is again oversold, and only then we have a reversal. So the first oversold signal appeared here. This is called a divergence. RSI already tells us that we have an oversold. What I found that the best coincidence with oscillator and price is the ranging market. So if the overbought, oversold conditions coincides with highs and lows, we are no doubt in consolidation. Very simple. If it starts lagging, if we don't coincide, the trend started, the movement is started. And as I use these advanced patterns and harmonic patterns, yes, you see how many patterns we have during the consolidation, and we don't have any during the trends. You see, no pattern, no pattern, no pattern here, but all these patterns are concentrated during those consolidation periods. And this is what I want to see. I want to see my indicator, oscillator, coinciding with extreme highs, extreme lows. It doesn't matter. It should be the oversold. It should coincide with that. If it coincides, then we are in a range. If we are in a range, we have patterns. And I want to trade patterns only in the range. I don't want to trade patterns when we have a downtrend, when we have a trend. You see that? For example, let me draw the pattern here. I don't want to trade this cipher pattern or a shark pattern. I don't want to trade this because oscillator says that we are trending. And what happens? No reversal, no targets, only loss is met because price is moving higher and higher and higher without stop. So the oscillator confirms that we are in a ranging market, and is very, very helpful with patterns. If you use it to draw patterns, if you use this swing identification technique, you can filter the majority of patterns. Okay, what I did, I have created a special software, and initially it was using only one swing identification algorithm that was price-based swing identification algorithm, and I call it PREX. The PREX swing identification. We had 4 versions in my previous MPS software, and it was small, 2 columns, 3 columns, 4 columns, 5 columns, 6 columns, 7 columns, 8 columns, 9 columns, 10 columns, 11 columns, 12 columns, 13 columns, 14 columns, 15 columns, 16 columns, 17 columns, 18 columns, 19 columns, 20 columns, 21 columns, 22 columns, 23 columns, 24 columns, 25 columns, 26 columns, 27 columns, 28 columns, 29 columns, 30 columns, 31 columns, 32 columns, 33 columns, 34 columns, 35 columns, 36 columns, 37 columns, 38 columns, 39 columns, 40 columns, 41 columns, 42 columns, 43 columns, 44 columns, 45 columns, 46 columns, 47 columns, 48 columns, 49 columns, 50 columns, 51 columns, 52 columns, 53 a medium, large, and extra large. And what is that? The small swing identification algorithm was actually the highest high or lowest low of 5 candles. Yes, the medium was of period 8, the large was 12, and the extreme large was 18. So you had 18 variations of the same swing identification algorithm, which is actually the highest high or lowest low between 5, 8, 12, or 18 candles. In my newest version, that is MPS version 5, I have added 5 more types. Not the variations of the same algorithm, but 5 more types. And they are oscillator types. Oscillator types. So not only you can look at the price extreme at Prax algorithms, but also at oscillator types algorithm. I will show it. I will demonstrate it in a second how it works real time, and I will show you the trading opportunity that I'm looking at as well. So be patient. What I want to say that if you use one method, one swing identification algorithm, and this method says that we have an uptrend, or we have a consolidation, or we have a whatever pattern, and you then look at something different, at a completely different approach. If you're looking at the completely different approach, and this completely different approach supports your view, it says we have a pattern here as well. And then you look at something else, you have an approach number 3, and it also supports your view. This means that we have no doubt pattern here. You are using this algorithm, somebody else is using something else, somebody else is using number 3 algorithm, yes, and you all three, you see the same pattern, you see the same level to work. Okay, initially I had this thought when I added harmonic patterns and advanced pattern into one software, and we had that switch between harmonic and advanced, and simply switching harmonic patterns, you draw harmonic patterns, simply switching advanced patterns, you are drawn advanced patterns. And there are the majority of traders are trading harmonic patterns, but there is also a large number of traders that are looking at advanced patterns, not using any kind of harmonic approach. But the best patterns are those that coincide. So according to harmonic approach, we have, let's say, a bad pattern that should reverse at this price, and according to advanced pattern, we have a godly pattern that should reverse at the same level. And this makes the pattern even more powerful. So it is kind of confirmation using this and confirmed by that. Okay. The idea was very good, but it was kind of problematic. You had to go into settings every time you needed to switch that. For example, there's Monster Pattern Search version 5, and you go to switch this patterns that you want to be displayed, and you switch this tumbler from advanced to harmonic and back to advanced or whatever, and that was a big problem. That's why in my newest version, in MPS version 5, I have created this graphic interface. And now let's have a look at this. So on this graphic interface, you can switch the method of the algorithm. So price extremes is the one that I'm using right now, yes? But you can use stochastic. Let's see what happens. Look at this pattern. It stays the same. It is also seen by stochastic indicator. So it means that at least one algorithm supports this view. Look at this RSI algorithm. It also tells me that this pattern is here. Look at this commodity channel index algorithm. It also tells me that we have a pattern here. Look at this Williams percentage. Yes, it also tells me all 5 algorithms say that we have a pattern. This is very rare situation when you have this pattern. It is no doubt pattern here. That's why I entered this pattern aggressively, and it hit my targets, both targets 382 and 618 respectively. Target number 1 is 382, target number 2 is 618 level. Both targets hit. having relatively small stop loss. So the stop loss was just at the border of that. Okay, and that's not all. If you look at this pattern, yes, not only advanced pattern traders were looking at this level. Let us switch to harmonic traders. Yes, let me disable other patterns. Look at that. Harmonic traders identified this zone as a bad pattern, bad harmonic pattern, and you see that BC leg, XA extension, and 127 AB equals CD pattern coincide at this zone, and you have that powerful Fibonacci confluence. This is another confirmation of that pattern. So that's why this graphic interface is very helpful. You shouldn't go to settings all the time. You simply switch it on and off using these buttons. This is something that is new in MPS software. Okay, and as usual, yes, it became kind of traditional. I added this button that prevents from recalculation. So right now it is on. This means that new patterns, as soon as they appear, they will be drawn according to the settings, according to the algorithm. I use this price extreme algorithms, so I want it be drawn this way. Yes, I'm using cipher pattern and custom patterns. Then I minimize my panel, so it's not taking some space on my chart. And for example here, if I still have doubts about these patterns, if I still need some confirmation to become extra conservative, to have some additional confirmation, although this pattern is sticking out to everybody, this pattern is seen to everybody is going to try that, yes, and it worked extremely well. Yes, I can still look at some confirmation. What is the confirmation? Let me find reversal. Let me find the reversal at some lower time frames. And what I use, what I do to identify it in the lower time frames, first of all, I switch that off. The patterns stay. And what happens if I switch to 15 minutes? These patterns that were drawn according to 30 minutes. Yes, basically, if it is on, yes, like this, and you switch that to 15 minutes, of course you will have the patterns that are based on 15-minute time frame information, and they will disappear. And you have it 30 minutes, it is drawn according to 30 minutes information. If it is 1 hour, it is drawn according to 1 hour. Yes. And to prevent the recalculation, that's why I have the button off. And then you go to lower time frame, and then you go to even lower time frame, for example, and you find this pattern. Some missing data here. Let me refresh rates and go to recalculate that, redraw the pattern, go back. Let's go to 5 minute. So here it is. So after this pattern completed by this candle, you say, okay, you know what, this candle is kind of very powerful downside candle. Let me look at some bullish candle to the upside. You look at the next candle, you say, no, you know what, it is indecision candle, it's not good for me. Yes. Then you look at the next candle, you say, you know what, it is still kind of bearish candle. You look at this candle, you say, well, it is still powerful bearish candle. And then you look at this candle and you say, okay, we now start kind of reaction to the upside. From now, the bulls are taking control. And then you go kind of consolidation, consolidation, consolidation. You say, okay, if we break this range, I will enter at market. And after the candle appears that is breaking that range, look at this candle close, a powerful bullish candle close. It closes at the top 20% of its range. The top 20% is this indicator that shows that it was 97% of the total range. So it almost stopped, almost at the high, closed at the high. Powerful break of this range. You say, okay, enter at market. You see that? Not only you executed your trade at a betted price, yes, conventionally we should set that as a limit order at a completion point, yes, you had a better execution price. Not only you had that. What it leads to, if you set the trade according to this, let me switch back to 30 minutes. Yes, this was the line of execution. So you will have better execution, you will have better risk to reward. So it is 13.6 of risk versus 17.3 of reward, and respectively 28.2 of reward towards the second target. This is the power of confluence power. Okay, the power of confluence. Monster pattern search users, if you are running MPS version 4, don't be in a hurry to request for your update. You will get it for free, but it is not yet officially released. I'm still working on it. I'm still looking at some bugs, at some minor changes. So don't be in a hurry. I will record a special video, a tutorial video that will explain all this stuff, all the features of that software. But for now, keep in mind that you should look at only at those patterns that are sticking out. Okay, another stuff that I wanted to talk about is this, the pattern itself. So the pattern should look like letter M, something like this, letter M, or it should look like letter W, according to your swing identification algorithm. Yes, if it kind of looks this way within this, this means that you are forcing the pattern. It is not letter M. If it looks kind of this way, this means that you are forcing the pattern as well. It should have one swing to the downside, upside, downside, upside. So how do you know when you have it to the downside, to the upside? I also added some feature that will draw the lines according to your swing identification algorithm. It draws the lines. If the line is straight to the downside, this means that it is one movement. Let's go somewhere into history. Let's go maybe deeper. Let me enable some historical performance, maybe 1000 bars back into history, and let us analyze that according to price extreme algorithms. And let me quickly disable the patterns that I don't want and enable the ones that I do want. Okay. Okay, let's go back into history. Don't have any for now. Okay, need to repeat the operation, maybe having another 1000. Go even deeper. I want to show you some patterns that that are not kind of fitting this. Disable, 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 enable, and custom enable. So let me switch that on. Okay, here. So you can see the movement should go and complete the pattern, but instead of that, it did what? It invalidated. So you didn't have any trade here. Something here at this. The movement started earlier, so you didn't have any pattern here. Okay. This one is not a good example. So what I meant to say is you should have a combination of swings. It should be upside, downside, upside, and downside. You shouldn't have them being 2 waves or 3 waves within this C to D leg. I saw many traders drawing patterns this way. For example, they treat this as one leg, something like this. Then they treat this as the second leg. Then they treat this as leg number 3. I don't know, maybe they have that swing identification algorithm that tells them, but I think that it was not the swing identification algorithm, it was forcing the pattern. The problem was forcing the pattern. For example, you first stretch the fibs for this movement, yes, and you say this movement is almost 786. When we have the movement at 786, this is called a butterfly pattern, and we know that the butterfly pattern terminates at 127. This is kind of backtesting, and you say, you know what, at 127 termination, 1414 invalidation, this pattern was a loss. Well, you know what, this was not a butterfly pattern. What was it? And to find out what was it, you stretched fibs here and you say it was butterfly and it was a loser. No, it was not this. And you say this, it was 886 and it is 618. Oh, it was a deep crab pattern. You see that? It was a deep crab pattern. It was not a butterfly. If only I knew that it was a deep crab pattern, I would enter it as a deep crab pattern, because a deep crab pattern has a completion of 161A and the invalidation of 2. So it was not invalidated, it didn't hit any stop loss, and look at the profits we had. So starting from now, let me trade the deep crab pattern. But the fact is that you don't know what is this pattern. The decision of making this a butterfly or a deep crab pattern was made based on this reaction. You already see the reaction and you understand that it was a deep crab pattern. But how do you know that it is a deep crab pattern if you don't have this reaction yet? How do you know it? Will you trade it from here? You will lose. Then you start trade from here, you will lose once again. Trade from here, you will lose again, and so on and so forth. This is called forcing the pattern. Especially, I noticed that stuff that people do that after a period of losses. Somebody is looking to recover foreign account. That's why he's looking at whatever trading opportunity that fits the ratios. But the problem is the swing identification algorithm first identifies swings and only then measure those swings and compare the relations between those swings. It's not correct to use arbitrary movements looking for a ratio to fit your needs and to tell you that you were right, telling that that was a deep crab pattern. Yes, it's not okay to do it this way. First, identify swings. Okay, and now let's do the market analysis. I was looking at this pound dollar, and this pound dollar hit targets already. So forgive me guys for this stuff. I found this pattern on 1 hour time frame, and what is remarkable about this pattern is this very simple sticking out structure of this pattern. It is seen on price extreme algorithms. It is seen on something else. I saw it on something else, maybe on 30 minutes. So I saw it on 30 minutes as well as William percentage range. I saw it as commodity channel index supporting my views. I saw it on RSI supporting my views, and stochastics no. And also price extreme, yes, it was 30-minute trade. So 4 algorithms out of 5 were telling me that this was a wonderful pattern. So I should enter this as a limit order. What I did actually, entered that as a limit order, and you see this price stretching my fibs, and it was this stuff. So 382 target is hit. For now we don't have any pattern on this pound dollar. Okay, as we don't have this pattern anymore, it already hits target. Let me do the analysis for other pairs maybe. Let me switch that between the portfolio. It will take some time to load because my screen recording software, it is consuming lots of memory, and that's why my MetaTrader is kind of slow. My computer is slow. Okay, what we have here? Nothing anymore. No pattern anymore. Okay, dollar-yen. First, what is my algorithm? How I do it? I first find the pattern according to price extremes. Then I am looking for a confirmation according to other algorithms. So what is it? Pound dollar. Here it is. It was on 1 hour, seen on 1 hour, and this cipher was also found recently. 2 trades were wonderful winners. Okay, euro yen, nothing. Aussie dollar. Aussie dollar, look at that. Pretty cool reaction, but I don't think that it was enough. This time it was a loss. And let us see if we had a confirmation using other algorithms. So it was stochastic, no pattern. RSI, no pattern. Commodity channel index, no pattern. And Williams percentage range, no pattern. So this means that price extremes is the only algorithm that see a pattern here. You shouldn't enter this. You don't have a confirmation. Why do you enter this? Stay away. This pattern is seen only to you. Okay, let's go to pound yen. Nothing here. Dollar Canadian, nothing here. Okay, next. New Zealand dollar, pound Aussie, euro GBP. Wonderful setup. I placed an alert in case price will go here. Okay, now let us see if it is complemented by other traders, if other traders will see this pattern as well. Okay, stochastic confirms. No, it didn't. What I told you about this mismatching, that price mismatched actual stochastic indicator mismatched actual price. This means that we are in a trend. We are most likely trending. We are not yet consolidating. So this mismatch is also signals that we are mostly trending rather than consolidating. So this is a warning sign. Now maybe you shouldn't skip this pattern. Should skip that. Okay, RSI nothing. Commodity channel index nothing, and Williams percentage range. It supports the pattern, but only Williams percentage range and price extremes are telling that the pattern will be here, and the stochastics and commodity channel index showing me that the price is mismatching the actual overbought oversold conditions. That's why we have kind of trending market rather than consolidating one. So the probability is that it will move this way. Boom. So simply disable that and don't trade it. Very simple decision making process. Try to think as other traders, so to try to stay within those. What other traders are thinking? By the way, Elliott wave traders, you have this 1, 2, 3, 4, 5 obvious 5-wave structure. This means that we should probably have an ABC correction, and then we have continuation to the downside. We can confirm that pattern, that structure, using other patterns. So price extreme algorithm first. This is my favorite one. It is updated on new tick. Yes, now it is done. When new tick goes into my MetaTrader, that's why sometimes it requires a second to update the information. Okay, no pattern according to stochastic, but it says that we have a trend. RSI is saying that, let me go templates, NBS 5 maybe. Okay, then let's go here to indicator list. Let's go to settings, and let's enable price extremes. Let's go this okay, relative strength index 7. Well, it is okay. Stochastic indicator, let me reset them. Okay, now they are okay. Now they are to my taste. And let me switch to price extreme algorithm and disable anything that I don't use. Custom pattern only, and this cipher pattern. What I was talking about, here is the stuff. So inside of this movement to the downside towards the completion took place here, yes? So we had not one swing hitting this entry, but we had downside, upside, downside, upside, and only then we had downside. So at this point, you do not enter. Don't hope that it moves to the upside. It will continue moving to the downside because we had several swings. If we have several swings within the CD lag, it means that we have a downtrend. Lower lows. This one is low, low, and this one is high, low, lower, high, lower, low. Very simple stuff. No loss here because no trade here. Aussie yen. Don't have anything on Aussie yen. Let me see in the settings here. I need to change my settings, especially the stochastic indicator. Okay, now it is within percentage range. Price extremes. So I need to save them as default settings, and then I need to go and actually use them on my chart constantly without resetting them all the time. It is not very simple. If you go to template and you save the template, and you will name the template as default. Let's name it as a default, like this. Yes, it already exists. I want to replace that. So whenever you open a new chart, it will be opened with this very settings, with this indicators having these same settings. So price extremes, cipher and oh no, I don't want passive into 2. I want it this way. Okay, minimize that, and then let me save it once again to have correct default time frame. Okay, now let's go to Euro Canadian. Well, I am to apply default time frame or default setting. What we have, pound CAD, GBP Canadian. Let me apply default settings. Okay, then let's go here. New Zealand yen. Look at this. So it was not a straight movement to the downside because we started a movement. It was not a straight movement to the upside because we started a movement to the downside. Even if it go higher and completes the pattern, you should not trade this. The pattern is invalidated. Let me switch to default time frame. And then maybe it is invalidating using only price extremes algorithms, but maybe it is still valid using some other algorithms. So let's go to stochastics. It says nothing. Let's go to RSI. It says that the pattern is still valid. Let's go to commodity channel index, CCI. It says that the pattern is still valid, but slightly mismatching the high. It indicates the power of the trend, especially these gaps. If it is a downtrend, maybe it is good. And the Boolean percentage range also says this. So 3 algorithms support that it is still valid. 3 algorithms say that it is still valid, and only one algorithm, number 4, says that it was already invalidated. So this means that the 4 algorithms out of 5 detect this pattern, and one of them is saying that it was invalidated. So the 3 saying that it is valid. So it's up to you. For me, if price goes to the upside, I would look at the confirmation. I wouldn't enter with a limit order. I will switch that off, and then I will switch to, what is the time frame? 15 minutes, maybe 30 minutes. Okay, maybe 1 hour. Now let's go to analyze other markets. The markets are very slow this week. We don't have many patterns. I had 2 or 3 trades. Okay, Euro New Zealand, potential pattern here. It is kind of very obvious, sticking out. This pattern is seen to everybody. If it moves in one swing to the downside, it should be a great opportunity. Okay, price extremes. Let's go to stochastics. Confirmed. 1 confirmation. RSI, 2nd confirmation. CCI, confirmation number 3, and Boolean percentage range, confirmation number 4. So we have 4 confirmation, 5 algorithm, 5 found this pattern. It is extremely obvious. No doubt we have a pattern. Everybody sees this pattern. Everybody's seen that. Okay, that's why you should have a look at this area. Pay close attention to this area. So whenever price approaches here, and I will be notified that the pattern is completed, I will look at this level. If we have 1 string, I will enter at market, placing the stop loss at this. If we have kind of choppy movement, but it's only invalidating using 1 algorithm, but others state that it is a valid algorithm, at least 3 of them should state that it is valid, then I will be looking at this kind of reversal zone from here to here. Yes, and I will be looking at some reversal on my lower time frame, for example this 15-minute or 30-minute. If you guys don't know how I choose the time frame for trading, for execution, you should watch my previous videos, especially this unified gut explanation in my previous video, the one before that. You will be taught the rules of identification, trade execution, and trade management of these patterns. Okay, so Euro New Zealand, write it down somewhere in your notebook maybe, to have it on your radar. Canada Yen, nothing. Aussie Canada, nothing. Aussie New Zealand, nothing. Well, that's it according to 1 hour time frame. Okay guys, and let me do 4 hour time frame as well, because it is also a time frame that I'm using pretty often for trade, for identification. I'm not using that for execution the trades, but I use that for identification to see if we have a pattern, and when we have a pattern, I'm not trading actually based on 4 hour time frame. In majority of cases I switch to 1 hour time frame to have a smaller stop loss, to have a smaller ATR, to have a smaller stuff. Okay, here's what I was talking about, was drawing today. These are the channels, 10 candle high, 10 candle low. It shows me if the movement is straight or it is a choppy movement according to those algorithms. And you see this button, it is MPS version 4. So we will be replacing them using MPS version 5. Go in template, press D on my keyboard, and you see that template is applied. So MPS version 5, nothing here. Very, very simple. Right click, template, D on my keyboard to load this stuff. Oh, I'd like to talk about this pattern also. So it was the pattern that was identified by this price extremes algorithm. It was found on 4-hour time frame, and if you switch that to stochastic, you don't have it. If you switch that to RSI, you don't have it as well. If you switch that to CCI, you don't have it, and if you switch to willing percentage, you don't have it. But here's the miracle: if you switch to 1 hour, you have it, but on 1 hour it was invalidated. Look at this C to D leg, it was choppy. It is not good for 1 hour trading. So price extreme tells you that it's not a valid pattern, but stochastic says that it was a valid pattern. Boom. RSI say that it was a valid pattern. So CCI, commodity channel index, say that it was invalid pattern, and William percentage range says that it was a valid pattern. So 3 of 4 algorithms confirmed that it was a valid pattern, 2 algorithms say that it is invalid pattern, and on a larger time frame it was a valid pattern as well with price extreme algorithm. So what I did here, I was looking at the execution using my lower time frame. So if you want me to show you how I did that, I defined this potential reversal zone between this and this. You see, very simple. This is 113 level. I call it invalidation level. Whenever price hits that, I typically go out if I am in a trade, and I start looking for any reversals anymore if it is hit. Okay, what happened here? The execution time frame was 30 minutes, and what I was looking at was a powerful candle. So we entered here, and let us start. After we hit this, this was a powerful close. Yes, powerful bearish close that closes within the range of lowest 20%, but it was outside of the zone. Not good for me. The next one appeared here, this one, and this candle closed outside of the zone. Not good for me. The risk reward will not be profitable, not be favorable. Okay, next one is this one, and it closed outside of the zone. Not good for me as well. Yes. Then the next one appeared here, and starting from this, it was good. So I executed my trade at this candle close. This was the first candle close within this zone that had a powerful bearish close. I mean that it closed in the lowest part of its range, in the lowest 20% of its range. So this was the trading execution. After that, simply stretch your fibs from here to here. Initially you set that 382 and 618 here, but as you see, that price action moved higher, then it moved lower, then again higher. That's why you need to restretch your targets, and that is called a target adjustment. And look at that, we had the 382, and then recently I hit my 618 target as well. After the 618 target was hit, look what happened. We started a reaction to the upside. Okay, this was a trading execution trading method of 4-hour unified Gartley. I decided to trade this conservatively because it was not supported by other algorithms, and on lower time frames the same pattern that is found was invalidated by some algorithms. So it is doubtful, and as I typically say, when in doubt stay out. So don't trade when you have some doubts. Simply do not enter them, or wait for some clear situation. Let me apply the default time frame template, and we don't have anything. Let me apply a default template. We don't have anything. Let me apply default D on my keyboard, and it automatically loads the default, because this templates, the only one with D is this default. That's why if I type D, it automatically loads the default. If I had something else starting from D, that is named from D, then maybe it will load some other algorithm, but I have only one that starts from D. Okay, what is this? I don't want it. Go into template, D. Loading. Okay, done. Go into template, D. You see how simple it is to analyze markets, how it is very simple. You have this swings drawn on the chart. By the way, you can disable them. There is nothing wrong about this. You can disable them. Let me reset this. It should be price extremes, relative strength index 5, stochastic 14. It's pretty good. Here you can disable. If you don't want to see that, you can disable this indicator and you will never see it again. You see that? Patterns are on the chart, but no zigzagging is drawn. So no irritating if you are irritated. Okay, now let us look at this situation. We have Euro Aussie 4-hour patterns based on this price extreme algorithm of MPS 4. So let's do the same using the MPS 5. Okay, come on, the default. Well, it is looking kinda strange. When I was saving my default indicator, it should say price extremes. It should go here, should be true, 1% is true, relative strength index, stochastic is good. It should be advanced patterns. It should be false for godly. It should be false for bad. Okay, it should be false for butterfly. Okay, should be true for cipher, and it should be true for custom godly. So it should be this way. Okay, I could set this using this settings. Yes, I could set this, but I also wanted this settings on control panel on graphic interface coincide with the settings in the indicator, and that's why let's go to template. Let us save this template. It should be a default as well. Replace it. Okay, so recently I had this pattern. Now let us see how I played this pattern, this upside variation. So I found that using the price extreme algorithm as usual. Yes, so I didn't have a confirmation of stochastic. Let us load. I didn't have a confirmation on RSI. The commodity channel index let me refresh the chart. Commodity channel index didn't support this pattern as well, and let me reload this chart as well. William percentage range didn't support that. Okay, you see, so the only pattern that was drawn is this price extreme. That's why I made a decision that I should trade this pattern very accurately. I should go to lower time frames and look for execution. Yes. So I switch that off. I go to 1 hour, and here I'm looking at the candle, and I had this candle at this very moment. You see that? It was a powerful bullish close. So I didn't have any opportunity to enter lower, so I entered at this candle. I would love to enter lower, but I entered here. And look at this, starting from here to here, initial stop loss, take profit here, and then it was restretched and restretched one more. It was thread to hit. The trade was break even. After this thread to is hit, looking for 618, it almost hit 618, but it didn't. And after that, it came back to my entry, and my second half of the position was closed. So these were the settings. And for now, as I told you, we need to look at this pattern. It is found with price extreme. If we have a confirmation on stochastic, it will be good. No confirmation. If we have a confirmation on RSI, it will be good as well. No confirmation. By the way, where is the overbought, oversold conditions? I don't see them. They should be dots on overbought, oversold. Stochastic, RSI, commodity channel, and William percentage. So no algorithms support this. That's why I will place an alert here, and I will not trade it aggressively. I'll look at lower time frames to execute this trade. And now let me reveal this secret how I choose the time frame. So I simply calculate the 3 ATR distance of period 5000. So the ATR is average true range. The 3 ATR is this 3 times multiplied average range of the candle. And if you look at the last 5000 candles and calculate the average range of those candles, multiply them by 3, you will have that 3 ATR period 5000. It is done automatically by my indicator, and it says that the current 3 ATR period 5000 is 1311. And if you look at this second number, it says 84.4. This means that this number is smaller than this number. If this number is smaller than this number, then I am to switch to lower time frame, like this. Oh, by the way, sorry, I disable this and switch to lower time frame, like this. So my potential completion of the pattern is here, yes. So switch to lower time frame. Then again, I look at this. It says 65 something, yes, 65.0. It is less than 84.4. This means that I am at correct time frame. You see that? The identification is done using the 4-hour algorithm, but execution will be done on 1 hour. I will wait for 1 hour to close and to confirm the reversal. It may happen exactly at this level, it may happen slightly higher, giving me a better price for execution. It may happen even higher, give me the best price for that, but it doesn't actually matter. On the 4-hour, this movement should be one swing. It should be one movement to the upside on the 4-hour time frame. Okay, let's continue. The Aussie yen, loading the template, default. Price extreme algorithms. Going next, the template default for Euro Canadian. Okay, here it is. Here's the pattern. GBP Canada, default. Okay, no trades. You see, if we have this, it stays the same basically, because it for my identification it uses the same method. So this pattern stays the same, but simply the channels disappear and this indicator is drawn. But the patterns are the same. So if we found pattern here, if we found pattern here using that price extreme algorithm of monster pattern search version, what was the version 4. In version 5 you can also have access to that. It doesn't mean that you cannot use that old algorithms anymore, so they are the same, and they are called price extremes in version 5. Here are they. Set those price extremes to your taste. As I told you, large, mediums, or small variations of that algorithms, actually 5, 8, 12 or 18 settings. Okay, Aussie Canada template. It was a losing trade yesterday. I had it here. Maybe I shouldn't enter that because it was not supported by any other indicators, any other algorithms, but I executed that on smaller time frame simply to have that confirmation on a smaller time frame execution. But if I switch to other algorithms, you see they don't see any pattern here. Other algorithms say that we don't have anything. See it? Well, one of them is detecting it, and the William percentage range, it sees nothing. So only 2 of 5 see the pattern here. This means that this pattern is seen only to me and maybe to somebody who is trading the pattern based on commodity channel index swing identification algorithm. Well, that's it. Oh, not yet. Aussie New Zealand, nothing. Okay, that's it about the trading setups, about the basics of price action, about this live market analysis. So you also saw how the professionals identify the swings. You saw the process of trading lifetime. You saw the process of identifying those patterns, and I assure you the majority of professionals simply use the software that draws everything for them. They rely on rules. Majority of traders, professional traders, successful traders, they rely on trade plan. They do not ask for some advice. They do not look for some for something to tell him what price is doing right now. They don't do that. They have a very strict set of rules, and this set of rules was back tested during the market research, during the back testing, historical trading, and if it has a positive expectancy, it is exploited simply because you have an edge. It generates money over time. It may have a loss from time to time. It may have, it may give losing trades, but it is winning in the long term. That's why, and you don't know if it will win in the long term until you do the backtest of that. Okay, now let me switch to default. I set some trading opportunities. They are awaiting for me, and that's it for today. Hope you liked this video. If so, give me a thumbs up. If you find this video useful and you have some friends, you can share this video on social media, maybe on your Facebook page or in some groups. And if you want to stay updated, subscribe. Just hit that subscribe button, and if you have some suggestions about the methods that I was explaining here, I am open to your comments. I will read them and try to answer. Let us have a vivid conversation just below this video. I remind you, if you are an MPS version 4 user, that the MPS 5, although it is looking good and it is very handsome, it is not yet ready. The algorithms are already done, but the graphic controls needs to be coded to perfection before it is finally officially released. Once you have it, you will be notified by email and simply stay tuned. If you are not in my email list, make sure that you go to my website www.ps-software.net and register. Everybody who is registered there will have an email that will tell you about my discount prices, about my new stuff, about my free events, free webinars, about very interesting meetings maybe, and some other stuff. I'm not spamming you. I only send the email when I have something to say, when I have something. Look, you should keep an eye on this stuff, or look, you should keep an eye on that stuff, when I have something to say. Well, that's it for now. Hope it was useful. Until then, good luck, good trading. See you soon.